Welcome into the live stream today. Of course, we're going to be jumping into Bitcoin, what's happening with the Fed. We'll take a look at earnings, all sorts of things. It's going to be a big one, and it's also going to be a big week. My name is Paul Barron. Welcome back into Tech Path. Today, we'll be breaking down all those kinds of things. You guys are going to love it. It's a great show lineup, and I think with what we're dealing with ahead of us, we need one expert to help us. And the expert we always call on, of course, is Mr. Gareth Soloway from In the Money Stocks. So great to have you back on.
So great to be here, Paul. Thanks for having me back.
Gareth, I was looking at this tweet right here. This one is like ridiculous. This week right here, we've got earnings, Microsoft, Apple, Meta, Google, Amazon, and so on. Then you've got FOMC coming in, mortgage applications, pending home sales, GDP prints on Thursday, PCE data on Friday. Okay, I'm thinking an alien landing by Saturday. What do you think?
I think that's about right. I mean, it is an insane week. What's so interesting is that because there's so much starting Wednesday, really Tuesday after hours, Monday has been just a gentle, very light volume day. It's like the calm before the storm.
Yeah, everybody's, I was looking at sentiment this morning and I was just like, this is very interesting. Everything's kind of flatlined. It's like everything. Yep. There wasn't one altcoin that was moving. We were seeing a lot of people really kind of waiting and huddling in their masses, waiting to see what the Fed is going to do. I want to jump to this first story. Market faces what could be the most important week of summer, Fed earnings, all this good stuff kind of coming down into it. Of all the things that are happening this week, what do you feel is the most important numbers we should be paying attention to?
So I think for sure, I mean, if you call them numbers, the FOMC statement on Wednesday, and I'm not talking about the interest rate. Most retail investors are going to say, oh, is it going to be 100 basis points or 75? The market already has it priced in right at 75. It might change a little if it's 100, but the bottom line is it's what does Jerome Powell say? What does he guide, considering there's no meeting till September? We know that the economic data is starting to weaken. So is he just going to tell us that it's going to be data dependent from here on out, in which case that could bring the dollar down, that could bring expectations for future rate hikes down? Or is he going to continue to say, hey, listen, we are going to keep raising at 50 basis points and go gangbusters until inflation is at X%? And then the market, I think, would react very, very poorly to that. So I think that's number one. And then GDP is for sure number two, because that's really the goalpost on what does that mean? And that's coming the day after the Fed statement. So my guess is the FOMC, Jerome Powell will know the GDP number ahead of time. So you can almost gauge what that GDP is going to be by what he says.
Yeah, I mean, he's kind of one of those people, when he does talk, he puts a lot of stuff in between the lines. You have to kind of read into it. But if you analyze a lot of the way he is, and it's interesting that we lean so much on what's happening with the Fed right now, especially in the crypto markets, much less, I think, the traditional markets as well. But he definitely does have a lot of that kind of in between the lines.
Do you remember back in the early 2000s with Greenspan and how everyone used to watch to see how heavy his briefcase was? That was like the determining factor. Is he going to raise rates or not? I mean, it was, same thing with Jerome Powell. You're right. One little word change can mean a lot.
Yeah. Yeah. I've seen a couple of body language experts now breaking down Jerome Powell. And I'm like, okay, now we've gone, a little bit over the moon.
What's his astrological sign? What did he tell us?
Right, exactly. A couple of tweets here. 71% of the S&P 500 market cap will report results by July 29th. So we're having that this week. When you look at S&P right now, things look a little grim out there for the S&P 500. What are your thoughts on how that may have some reaction by the market? Positive, negative, neutral? Where are you kind of leaning with this one?
Yeah, so I mean, I do think that earnings so far, I mean, we've seen a good report by Netflix where they really saw a big pop. We've seen a few others that have been decent and then some that have been poor as well. So I think it's going to be a spattering, meaning there's going to be some good, some bad. I think that a lot of these tech stocks, you may see just a little bit of relief afterwards, saying, okay, it wasn't as bad as it could have been. As long as they really don't throw a real dud out there. So I'm in the camp where we could see a little bit more sideways to upside in the S&P, but I think last time we talked, I was in the same position where this is a bearish pattern developing on the S&P, which is sideways to up, and those usually 80% of the time or so, these result in another leg down in the market. And I think you have to think that, there's really no good outcome with the Fed. If they raise too aggressively, the market's not going to like it. If they step back and say, hey, it's getting too weak out there, then the markets are going to fret because they can't lower and print money anymore to save the day if we do slide into a recession. So it's really this double-edged sword, and the market just doesn't fully realize it yet.
Yeah, this is the thing we've talked about quite a bit, is just the tightrope that's being walked here for not only what's happening in the traditional markets, just in general. If you look at global macros really kind of affecting what's going to happen, I think, in the next 5 years. Some stuff from China, we'll talk a little bit about that. But I was looking at this tweet here by Lisa Abramowitz from Bloomberg. She's basically kind of breaking it down. S&P companies will miss sales estimates due to dollar strength, according to Goldman Sachs economist David Kostin. And his model shows a 10% gain in the trade-weighted dollar may cut EPS by 2 to 3%. Explain that to me.
Yeah, so I mean, basically, right, so what this basically is telling you, and we saw this, by the way, from IBM. When IBM reported, I think they took a $3 billion charge due to currency issues. And essentially, when these companies are all over the world at this point. They're multinational. So if you sell your widgets in Japan or in China or in Europe, and the dollar strengthens substantially by the time you transfer that money out of yen back to dollars, you lose X amount of percent on that sale. Essentially, you're losing revenue and profit. So I think that's what she's talking about. And honestly, we've seen it already with some of these companies. My one guiding positive is that I do think the dollar in the near term has topped. And I think you will see it as a positive into next quarter. We've already seen it start to come in here. I think by next quarter, we see it down even more.
So, okay, so you and I are on the same wavelength then. That's my anticipation is Q3, Q4. Q3, Q4, I think we tip out or top out on where the dollar is, and we'll start to see some correction here. I was looking at this tweet here. Chart shows the implied volatility of the S&P 500 for today, and 3 Mondays before the June, May, and March FOMC meetings. So they came out trying to create a pattern here, basically. Implied volatility as of today is the lowest that it's been ahead of a meeting so far. So again, you think, back to your point, we could see some slight downturn on this?
Yeah, I do. Yeah. I really do. I mean, every chart that I'm looking at of the Dixie, really, the DXY, we hit this upsloping trend line, major resistance, and we should see a continued downside move. In fact, I think the last time I was on a couple of weeks ago, we talked about that too, about the dollar topping out. And the dollar so far has come in, not a lot, but obviously the dollar doesn't move really crazy in a very short amount of time, or at least we all hope it doesn't. Otherwise, things are really, really in trouble.
Okay, so again, you look at the S&P, you look at traditional finance in general, still tied very much to what's happening in the crypto markets. Obviously, Bitcoin seems to be lockstep right now with the S&P 500. With that being the case, and we see some slight downturn, what are your outlooks for your current outlook for Bitcoin, maybe in the near future? I'll say the next through July and into August. Let's point it out that because obviously we don't have a Fed hike coming in August. We won't hear from them again until September. But let's jump to your chart and take a look at Bitcoin over the next little bit.
Yeah, absolutely. So basically what we have is we had a breakout on Bitcoin in the near term right here. And you saw a close above with a confirming move following it. And what we've done since then is you've kind of created this little bit of a channel of consolidation right here, which is actually, I mean, a lot of investors say, oh my goodness, we've been down, pretty much 2, 4, 5 days out of the last 6 on Bitcoin. But notice how it's a very slow kind of grind lower. Today, it's getting a little bit more fast. But for the most part, this is actually what we would refer to in the technical analysis world as bullish consolidation. And so what I'm really watching is this 21.8-ish level. I want to see where it closes. It can close just below that, but you don't want to see it trade down in this range too much longer before it starts to move up. But I'm in the camp that over the next, rest of July into August, I think Bitcoin still has more upside to go. I'm looking at a target of 25.5, which is up here. And then eventually I even think we could get as high as around 28.5 or so right up here. This is kind of my max move though. This downsloping trend line comes all the way from the all-time high. So notice how these two lines are right in the same area. So I think that, again, that would be your maximum upside. Your shorter term target would be 25.5. So I am bullish near term on Bitcoin, even though I'm midterm bearish.
All right, so this is a good analysis too, Gareth, because we've been looking at this from, at least from the sentiment side. We look at those near term on a thing we register as amplification. It's been pointing down, so it kind of goes in line with what we've seen over the past few days. But at the same time, if you look at the narratives and even to a certain extent some of the fundamentals that could drive a rally to 25K, what is coming in outside of, because most likely we're going to see negative housing numbers. We're probably going to see some more consumer credit crunch numbers. We'll probably see additional push on some of the key S&P 500. Where would a positive spin come from this other than maybe a weakening dollar?
Yeah, so I think number one for me is a weakening dollar. I think also if the Fed on Wednesday is not as hawkish, if let's say they open the door to saying, hey, we're going to slow down, maybe we're going to pause, that would be a risk on scenario where all of a sudden you see this risk on in the stock market, NASDAQ stocks get another leg up, and that would also lead to another move up in Bitcoin. So I think the weakening dollar would kind of coincide with that as well. We see those type of things move together. The more dovish the Fed, the more they're not tightening monetary supply, so the dollar doesn't necessarily get stronger. So for me, that's exactly it. The Fed decision Wednesday, GDP on Thursday, those would be the driving forces that would probably lift Bitcoin.
Okay, all right. I was looking at this statement in here on Tesla reports a $64 million profit from a Bitcoin sale that they also did. Remember, also they just had a large percentage of their Bitcoin that they pulled off the books. Many people were looking, and even Elon kind of mentioned to the point that they needed some new cash coming in just because of the cash, or I should say, the expense cows in a lot of these new manufacturing plants. Is there anything that you would read into that from an essence of just bullish on Bitcoin or bearish on Bitcoin because of what Tesla and Elon Musk has been doing?
Yeah, I don't read into it as a bearish signal. If anything, I kind of look at it in a contrarian view, is where you had one of the big whales holding, I think, $1 billion of Bitcoin. He unloaded a majority of his stake. And, if we've already seen that being distributed into the system, into the Bitcoin market, and investors have bought that up, maybe that's a small positive in all fairness, that the market was able to absorb that. And I know we have, some other, I think Mt. Gox might dump 150,000 Bitcoin. I want to see the market, the Bitcoin market, absorb that. Maybe it goes down a little bit, but if it can absorb those type of sells, then what it tells you is even in a bear market, there are still buyers out there. And that's a very longer term bullish sign, even if it's not a very short term bullish sign.
Yeah, and I think that's the key is long-term bullish is, it's the number one thing that we try to track when you look at just in crypto markets in general. Long-term, let's talk long-term for a second, and that is possibly into Q1 and Q2 of next year. We still have a recession. Many will say that GDP number is going to prove, yes, we're in that recession. But there's a lot of things happening that I feel that those numbers are going to come in and clearly show it in the case. Because you've already got scenarios where the White House is already kind of playing a little defense here with Secretary Yellen saying the U.S. economy is not in a recession. What is the holdback of, the White House at least just admitting that, yeah, we've had 2 down quarters, so yes, we're in a recession and we're guiding our way out of this thing. What's the holdback for that? Just because of the election?
I think that's what it is. It's just political. It's not good to have federal government says recession and you have that plastered on all the newspapers out there and all the websites. So I think that's what they're trying to avoid. I think it's a little foolish. I've always found, and this goes to what I do as a trader, and when I mess up, the best thing you can do is just say, hey, listen, this is where it is. This is how we have to deal with it. And let's charge forward and correct it, or at least, move in the right direction. So I really think, the investing public, the public in general, they have to give more credit. There's more intelligence out there. People understand where things are because it's dollars and cents. And we know the price of energy. We know the price of food. We know the price of goods and homes and all these things. And it's a struggle for most people. I would say the one thing I would do if I was them, I would classify as different groups, right? So for instance, myself, I'm not in a recession myself. I mean, again, I think upper middle income, you're fine. I think it would be helpful if the government came out and said, hey, listen, if you're in this group of earners, yes, you are in a recession and we are going to do everything we can to help you, but not everyone needs the help.
Right. Yeah. I was looking at the additional statement she said on here, kind of pointed to. It says, I'd be amazed if they declare the period of recession they were talking about. This is the reporter, even if it happens to have 2 quarters of negative growth. But they have a very strong labor market when you're creating almost 400,000 jobs a month. She states that it's not a recession. I mean, that's That's interesting, but the likelihood is this is going to, it seems like they're backing themselves in a corner because that number is not going to sustain.
No, I mean
There's just no way.
it's so ridiculous because first of all, we know from every previous recession that the jobs numbers are lagging indicators, right? So
Hmm.
so you know where this is going, and so standing in front of a freight train that's barreling down on you, what's
I
the
don't get
point?
it.
You're just gonna look the fool. So I mean, I wish I knew, Paul. I wish I was smart enough to know the behind the scenes, but honestly, it's just gonna make them look bad later on.
I mean, these are supposed to be smart people. I mean, this
It's
is,
supposed to be. I
I
mean,
just,
wait a minute. So yes, they're supposed to be smart people, but these are the same people that told us that modern monetary theory was
uh,
fine and wouldn't have
now we're
any
going.
repercussions. Print as
Yeah.
much money, it's never going to cause inflation. Okay.
Okay. Yeah. Just keep on. Dump trucks of it. Bitcoin
Yeah.
rejected perfectly off the 50-day EMA, sitting on a very critical level at the moment at 21.8. This is kind of your point. This is the 20-day EMA. The
Mhm.
Fed will be the key. Obviously, they're kind of pointing to this. What is tied to the moving averages so much so, especially on the 20 EMA? Is there something that is significant about that moving average that gives us some sort of concern, especially trading on Bitcoin, where we're looking for these little swing trades? What are some of the indicators we need to be watching in terms of the moving averages?
Yeah, so you're right. I mean, moving averages historically have had played a big role. I follow the 20 moving average, the 50 to 200. I know a lot of people follow the 100 and the 150 as well. And basically, I don't know if there's something psychological that makes us as humans abide by some rules about like the past 20 days, which is the 20-day moving average, or if it's
Yeah.
just that we all have it on our charts now and we're all like, oh, look at that, you know. And when you have a million people saying the 20 MA is being hit or it's breaking, that can psychologically trigger more selling if it's breaking versus if it's holding. So I'm not 100% sure about the underlying powers of the moving averages. It's just something that historically has always worked until it doesn't, right? Until it breaks.
Yeah, exactly. Interesting enough, Bitcoin, came from Citibank. Bear market could be coming to an end, says Citibank. I don't know if this is a joke or if they're trolling me or what's going on here. This is a bank talking about Bitcoin. Why, first of all, and now why are we listening to banks for the very first time to consider our Bitcoin trades?
Yeah,
So,
I mean,
so
probably to get headlines. I mean, the banks, right? I mean, you think about how many people are invested in crypto that are younger now, and the banks want to be on that front page with them as well. But I think that I don't think banks have had a great track record of calling
yeah,
markets in. I mean, they were all bullish when we were at all-time highs, and now they're starting to get bearish. They still haven't downgraded price targets on stocks based on earnings. They're always late to the punch, so I take it with a grain of salt. Let me point out also that when oil was at 130, Goldman was upgrading it to what, $200. I mean, and then we
hmm,
saw it drop to what, 93 as of the last 24 hours before a bounce. So it's just people have to kind of think about it and put it in perspective and then really do their own research. I think this is a great example of, do your own research, look at the charts, learn the charts, and that'll guide you in a much better way than listening to anyone, including myself. I mean, everyone needs
yeah.
to, you never want to just follow someone blindly. You always want to understand why.
Which brings up a reason we do these market movers. When we do the
Yeah.
market movers, the idea is it's here to help you guys on your research quest. It's not investment advice. Definitely go out and build your portfolio your way because everybody's going to be a little different. So just remember that. All right, so a couple of things here. This was a tweet from CZ that I thought was interesting. Let me kind of zoom up on it just a little bit so you can see it there, Gareth. When I read Glassnode reports Bitcoin leaving exchanges, and of course that's usually going into cold wallets, I was like, hey, wait a minute, what do you mean? The graph below explains this over shrinking, but Binance is growing. So also shows relative size of exchange on this dimension. So again, we're getting kind of some different feedback here from the chain. When you look at on-chain data right now, there has been a lot of people moving into positions off into cold storage, but at the same time, it feels like could people be positioning Bitcoin back in a market to prep some sort of run? So it's like somebody getting ready to go into a run.
Right.
A lot of times, like what I'm doing, if I feel like we have a run coming, I'll get off my ledger and start moving Bitcoin back into an exchange for a sale. Do you think that gives us any kind of front running signals that CZ is talking about here?
I think it does in some respects. So what I look at it when it goes to cold storage, kind of like that, is that when people bought it at 60,000 and it's down at 20 or 19 or 18, there's going to be a point where they're like, listen, I'm going to have to I'm just going to tuck this away. I'm a long-term hodler, and then as soon as price starts to spike, which is what we've seen recently, they're all of a sudden like,
Yep.
oh my goodness, maybe I should bring it back, because if I can just get back to 60,000, I'll sell and break even. That would be an amazing recovery. So it's a very psychological thing. And I agree that you just can't say, okay, there's a lot of storage going on off the exchanges, so that means people are just diehard going to hold forever, because mentality and psychology of the investor can change on a dime. And you know that. I know you know that.
No doubt. I mean, it is a scenario we're watching just in the terms of the data that we collect on the amount of traders, retail traders, that are constantly, whether it's on social, that are very bearish and or bullish on any asset out there. One thing that has not happened in this bear cycle is that we haven't seen the market correction of a large number of retail, even though a large number of retail have left. Percentage-wise, when you compare this to even 2017, the amount of people that are still staying in crypto is still fairly significant. So that in itself, when you look at that, Gareth, do you see that as a much more long-term bullish signal? I'm assuming you do.
I'm not sure. And let me just explain what I'm thinking here. So my concern with that is that every cycle, if it's the stock market, we've seen it in the stock market, but every collapse, you saw this in 2009, retail went away for years and years. And we saw this in 2000 with the dot-coms. And so the fact that hasn't happened, does that tell us that we haven't seen the full flush out yet in cryptocurrency? And the reason I say that is because if you just go back to last year, I mean, we had dropped to 30,000 before that run up to 69,000. And people got programmed to think that, hey, listen, if we drop to 30, and we're only at 20 now, which isn't so much, but maybe in 6 months, we're back to 75,000, And so I think that's my one concern, is you haven't seen that full flush out yet, which means it may still not be over, and we may need to see the retail throw up their hands and walk away. And again, I don't want that to happen, because I think it's so useful and so good for retail to be involved, but it's just the way cycles work, unfortunately.
Yeah, I think to your point, Kiyosaki talks a lot about this, as the market is yet to really experience the next phase. You and I have been talking about this for quite a while now, is that this is not necessarily, we're going to see some nice little runs, which are going to be great. And you definitely want to play those if you're a trader and you like doing swing trades. But definitely not something that I think is going to hold there very long. I think we're going to get a chance at sub 20 again to get some Bitcoin in those areas. So for sure. Does anything come into this when you look at liquidations out there? You had 57,000 traders liquidated as we went under the 22 mark. Does that play into this in the near term, especially toward mid-August? What are your thoughts on liquidations between now and mid-August?
So I think the liquidations help put in short-term bottoms, but the ultimate liquidation will be that one where the retail kind of gets really scared and kind of stays away for possibly years on cryptocurrency. But I think when you get stuff like Voyager, when you get Celsius's bankruptcy, those, believe it or not, they scare the public to the point where anyone who is going to sell sells, and then everyone else kind of holds on, and there's no more sellers. And that's why you get these little short-term kind of mini bull markets within a bear market. And I think that's what's going on here. So ultimately that will lure, as Bitcoin inches up, it lures those investors that kind of got spooked earlier to come back in. And the next, they basically, unfortunately, lure enough in that on the next dump out, then you'll see that selling pressure again.
Man, the market is so brutal sometimes.
It is.
It takes no prisoners. No prisoners. I was looking at this tweet here by CNBC, and I was, first of all, surprised that Scaramucci went on camera. Because of all the people that have shut down withdrawals, Anthony Scaramucci of Skybridge was the only one to respond to it. And he actually said, hey, maybe I made a mistake on short-term Bitcoin, but long-term, he said, I want to see how this plays out in the 4-year cycle, because that's really where this plays out. Do you feel like this does damage to investment firms like a Skybridge long-term, or do you feel like this kind of PR move is a positive for his investors to understand that this really is a longer play?
Yeah, I think it's a fine thing, because I'm in agreement. I think shorter term, I mean, you're in a 4-year cycle. We've seen the 4-year cycle play out over and over again. There's nothing to make us think that anything is different like that. And I think him just admitting it is actually a very positive. People are more than willing to forgive when people admit their mistakes, I've found.
Right.
And I think that's exactly what he's doing. And I think he's reminding people that, we can't be in it for the short term mega move. We have to be thinking long term where it's the exponentially big mega move that we're after. So you got to weather the storm sometimes to win the battle, right? The war.
Yeah, for sure. Make sure and hit the like button, guys. We'll definitely get into a couple of questions. But before we do that, I want to definitely get into Ethereum with you, Gareth. And you look at a couple of things that are happening with Ethereum. I was looking at this story. Bullish pattern is terrifying Ethereum competitors ahead of the merge. Now, we know that the merge, we think that the merge is going to happen in September. If that occurs and we see a lot of goodness coming into the ESG space, obviously the whole aspect of sharding and so on with Ethereum, how does this play out for Ethereum if you look at a long-term chart for where Ethereum starts to move? Is it truly going to see a flippening down the road?
Yeah, so I'm a little skeptical on these type of merges and these type of things in the near term, mainly because investor sentiment is the number one thing that rules price, right? So
Yep.
yes, this is probably keeping people from shorting it right now. They don't want to step in front of a freight train if it takes off.
Right.
We've seen an amazingly big bounce in Ethereum, but the one thing I'm seeing here, and I'll flip over to my chart and show, is that basically we have this kind of bullish consolidation. So you do see a bull flag forming. This is a very clear bull flag. Now, I don't want to see this candle break down too much. Right now, it's right at the lower end of that flag. But basically, the upside is somewhat limited here. I mean, there's the first resistance level, which is right here around 1700. So we're not too far away from that. And then even if it gets through 1700, around 1900 is the next big resistance level. So I'm in the camp where I look at this and I say, okay, yes, there's some upside left. And I believe that Bitcoin, Ethereum, they will see upside. But you could actually maybe see the run occurring into the merge and then a sell the news event. And I think that is the likely scenario here, where maybe we get to 1900 and then once you see that merge occur, then the selling takes back over.
So again, back to the scenario of possibly a September, there's a lot of things that are happening within September too that could also have a lot of validity in terms of moving some markets, both with Bitcoin, obviously will be ahead of the midterms a little bit, September. We'll also get another FOMC meeting in September. That'll be interesting, which this is the thing that we've been talking about, anticipating in Q3, is if we see the September FOMC as the potential for the Fed to try to show some sort of market correction, meaning maybe we go down to 50 basis points, maybe we see a CPI print that's under 9 again. If we did see some of those kinds of indicators deep into the fall or deep into the summer in September, with the fact that the merge could be happening at that time, could we see an explosion of both Bitcoin and Ethereum with those kind of market conditions?
Yeah, I think that's the key is if you saw selling going into it, then I would believe that you have a much more bullish case. It's almost like earnings, right? So like a company that runs up 50% into earnings, they might beat the earnings estimates, they might raise guidance. And I've seen many, many instances where the stock still sells off because it had such a big run into those earnings. So I would say the same thing with Ethereum. Right now, Ethereum has rallied up towards this. If it continues to move up into it, I would expect a sell-off on that event. However, if you see the opposite occur where it starts selling off back to $1,000 or so, then I think the opposite could easily happen.
Yeah, I was looking. Goes back to your to your bull flag here. ETH relative to Bitcoin still waiting the breakout for Ethereum to outperform. Ethereum 2.0 may hasten this flippening. Again, goes back to the scenario. I think a lot of macro indicators, though, really right now between what we're doing this week, which is a very important week for the rest of summer, but it also is an important week because I think it starts to set the stage for right before a pre-election cycle. And that's going to happen in September, maybe early October, before we really see the pressure of midterms come to fruit. All of that will play into it. If we do see some lightning and all that, I think those are the things, at least I tell everybody in our group, that's what we've got to be watching. Are there any indicators right now for Ethereum? If we could jump back to your chart for a second, I want to take a look at that flag because you were showing something there that was interesting to me, and that is the down pressure that we're currently experiencing right now. So that red candle that's painted in there right now, what brings it out of that at all. If we still see a 100 basis points or a 75 into the market tomorrow, and the Fed maybe comes in hawkish, do you think that causes a problem for Ethereum?
Yeah, I think if the Fed said, "Listen, we are not going to stop until we get back to 2%, even if the economy weakens," and they raise 75. I mean, I think again the 75 or 100 basis points is somewhat
Price
non
down.
non-factor at this point, but it really is that statement, because that statement, if they're like still gung-ho, like basically hell or high water, we're going to make sure that inflation goes to 2% or under, then they're going to be raising a lot more, and that's going to spook the markets quite a bit. So I think that's the bottom line. Is That's why Wednesday is so important. Also, because Wednesday, again, you assume that they know the GDP number already, which will then guide us to what that GDP number should be.
Yeah, yeah, I'm kind of with you. Gareth, okay, and we're going to take a couple questions, but I wanted to get your opinion on this. We're starting to see more and more politicians that are starting to talk a little bit more favorably about what crypto can do. This is a tweet here by Bitcoin Magazine. New in, we can eliminate inflation with Bitcoin, U.S. Senate candidate Brian Solston. And we're seeing this is kind of a theme that seems to be coming around much more, is that candidates are actually starting to roll in more and more on a positive side for crypto in general. Do you think that changes the dynamic when you look at post, because now we're past November, we're in Q4 earnings, we have all those things happening. Does the end of the year look a little bit brighter if we do see a kind of a pro-Bitcoin Senate and House?
Yeah, I think it does. I think this is a huge aspect that most investors in crypto don't understand. It's the need for some sort of regulation, positive regulation, safety measures being put in. Again, if you want the big money to come in, and we're talking pension funds with trillions and trillions of dollars, and just putting 1% in crypto, that's a game changer. And if you want institutions to get involved. And so the fact is, I mean, there's a couple reasons. Number one is I really truly believe politicians see the amount of money that they're spending, and they're thinking, okay, well, we're going to spend even more money. So that makes Bitcoin even more viable as it eventually deflates the dollar. And I think also you have to think a lot of these candidates that are running for re-election or election, they have to get votes. Well, right now, a lot of the younger generation is super into crypto. So if they can talk positively about it, it brings more of a vote towards them. So it's honestly, who cares? I'm in the position of I love long-term crypto, so I don't care why they're doing it. I just want to see positive reform, and that is the best thing long-term for Bitcoin.
Yeah, I think it also starts to set up the market in general, because the market still, remember, we're less than $1 trillion industry right now. If you think about all of crypto and the potential of what it has with Web3, blockchain in general, this is a very baby market at this point. We're just an infant, and any kind of guidance, I think, from a regulatory powerhouse like the United States government could really start to shift things in a very interesting way. I think even without the US, there's enough pressure from the global stage that we still cruise right along in case we're too slow to the punch. But if we do get any kind of movement, it'll be one for sure. We're going to jump to some questions, Gareth, so stick around for these. We got Mario D coming in with a question for you. Do you think in the next crash of Bitcoin to 12K and the S&P 500 to 340, instead of the dollar rallying, can we see gold get into the mix? Is Peter
That's a
Schiff in the
great
comments?
question. That is a fantastic question. So I continue to be a gold bug. I mean, again, since the start of the year, I said gold would be a better performing asset than Bitcoin and the stock market. So far, I've been right, but I honestly have been disappointed with gold's performance recently. I think the fact is that if you think about the Fed maybe potentially getting inflation under control, and again, I think it's not that they're getting it under control, but that I believe we've seen peak inflation, then it does create a scenario where people say, okay, well, if inflation is going to start to come down, do I still need the safety of gold? I mean, what if inflation, in this perfect world, inflation goes back to 2%? Well, what's the point of gold then, right? That's what people are thinking. That's why gold has underperformed here. I don't think that fantasy will last very long, in my opinion. So I do think that gold will perform. I do think it'll perform better over the next 6 months into year end than crypto as well as the stock market. Long-term Bitcoin will far outperform gold, though. So I think gold over the next year or two, better performer, not over the long term after that.
Yeah. Another question coming in from gas fees. People should worry that the SEC classified ERC20 tokens as securities. E2O is in the crosshairs of Mr. Gensler. And this is something we've talked about for quite some time. Will we see more and more ERC20 tokens start to fall prey to a potential scenario? Do you think any of this is going to play out? What are your thoughts in the near term for that?
Yeah, I do think so. I do think that Gensler has made it pretty clear that he believes almost everything aside from Bitcoin is a security. The question is, what is the framework going to be for that? What type of regulation will be imposed on these things? And I think that's something that honestly I'm not really super clear of myself yet. And I think they're doing a very poor job of making the market, the crypto market, aware of that. And that's actually probably one of the reasons why you're seeing crypto underperform. There is this risk about, well, what does this mean? How are these going to exist? What's the world look like after we get this regulation out there? And I think, again, the faster we get a framework, it's almost like a buy the news event where they finally tell us and we can all breathe a sigh of relief and saying, okay, well, it's not the end of the world. Let's buy.
Yeah, I know exactly what you mean. I know we got a poll coming up here. Let's take a look at the poll. All right, is Bitcoin rally over? Yes, headed back down to the 20K. 67% says we are on our way there. And then another group in there at 28K first, 33%. So do you think we see a sub 20 here in the short term?
No, I'm in the 33% camp. I think 28, well, minimum 25.5, but I think there's a good chance we see 28. But then we go down to 12, 13 probably.
All right, so we still
the reason why I was smiling is because the great thing about polls is you get a good general sense of the general retail investor, and it's usually the opposite. And it's no offense to any retail investors. It's the psychology of the way we talked about this earlier. It's the way the markets work.
Yeah, sentiment is the key, as you said, and I think, when we look at sentiment, it often will have so much similarity to what price action is coming into the market. It's eerie how close that happens. Last couple of questions for you, Gareth. We've got here, can the ETH merge fail and cause an absolute debacle of the whole space? Meaning we could see just a ridiculous amount of altcoins cause a problem. I mean, that's a pretty big statement coming from crypto world there. That would be, that could also hurt Bitcoin though, in a big way.
Yeah, I mean, anything that shows any sort of major issues. That's one of the reasons why, Solana has had outages, and I really think, I hope they get their act together, because I think everything that these bigger coins does influences the perspective of future investors. So I hope that them delaying the merge for as long as they are, they're doing double, triple, quadruple, 100 times checkovers, because they have to realize they have to get this right. If it doesn't work out, I don't think it's the end of crypto, but there absolutely will be a kind of short-term freak out.
Yeah, definitely going to be some fallout on that. I'm looking at this. Okay, Gareth, we get past the next little rally here. Let's say it's a 25 to 28 run. We see a little bit of movement here on Bitcoin. The correction starts to come in. When would you be, and I know you're not a big altcoiner out there, but we have a lot of people who love altcoins. When would you be looking at potentially going into altcoin or metaverse kind of projects, especially as dominance starts to shift and we see some of that movement? Any thoughts on that?
Yeah, I mean, for me as an investor, I would want to see Bitcoin and Ethereum bottom before I really took stabs at other ones. Because again, my biggest fear is that, yes, I think Polkadot survives Cardano, some of these other ones, but there's no guarantees. And I think we learned that, or at least I learned that in the .com era, as well as in other bubbles in markets when they finally collapsed. So for me, everything that I'm doing is kind of based on Bitcoin, and then by a second measure, Ethereum. And when those finally look like they've bottomed out, and if you see that, let's say Polkadot is trading at whatever it is, I would absolutely put a very small percentage. And again, asset allocation is really important here. Bitcoin is the biggest, it should get the most, and then Ethereum, and then you kind of base it all down the hill like that.
Yeah, make sure and hit the like button if you guys want to have Gareth back in on our macro and markets Mondays, which is going to be fun. Gareth, last point, and that is stablecoins. Some regulations are coming in, or some proposed regulation for stablecoins coming in, potentially to Capitol Hill in the near future. You look at someone like, Mr. Wonderful, he is big onto USDC. but he's not so great on Tether. What's your position right here in terms of a stablecoin?
Yeah, I mean, I don't unfortunately have much of a position other than that I just watch them closely, especially after the Terra Luna stablecoin collapse. As of now, they weathered that storm. They did relatively well. I did see a little hiccup in price, but the fact that they recovered, I think what doesn't make you fail makes you stronger in the stablecoin game. And I actually think they learned a lot from that event. So you take other people's experiences and you learn from them. So I think that for the most part, I'd be right in the mix with both of those. And if you're in them, just kind of diversify and just be careful as well. Always keep an eye on things that could hamper price.
Big time. Gareth Soloway, always fun. Always a blast, my man. Good to see you, and we'll definitely get you back in here on our Macro Market Mondays and dive in some more. It's going to be an interesting week, so thanks for stopping in. We appreciate it.
Thank you, Paul. Take care.
All right. Catch you later. All right, you guys are tuned in over on the podcast side of things right now. Thanks so much for tuning in over there. We appreciate all the love on Spotify and iTunes, but guess what, man? This is the place that you need to catch all of these great interviews. A lot of these technical analysis that we do here on the show are right here on YouTube. It's very easy to find us. Just go out, search Paul Barron Network. You'll find all of our videos. And the best thing is you can actually subscribe to the show. You can hit the little bell, and it's going to start sending you notifications on YouTube to let you know when we're doing live streams just like this one. So get that done. It's easy. Jump into the Diamond Circle. It's part of the group. It also creates, I think, a presence for all investors right now, which is get in a community, whether you're in ours or the guys over on Altcoin Daily, if you're into altcoins or Crypto Banner, whatever it is, get into the groups that help you make decisions on your financial future, because kind of running in packs is a very, very important thing right now. If you guys want to reach me, it's out on Twitter at Paul Barron. We'll catch you next time right here on TechBath.